Good afternoon, everyone. My name is Meagan Tenety. I'm a lead advisor on Nasdaq's ESG advisory team. I'd like to thank the team at New Zealand Banking Innovation Summit for inviting me to speak today about all things ESG. In our conversation today, we're really going to focus around why ESG, why now, the impact that COVID-19 has had on both the environmental and social pillars of ESG, and ultimately how ESG impacts overall corporate performance over time and how companies can really harness the power of ESG to create value over time. So before we really begin, I think it's important for us to work together to define what we think about ESG. Now, E stands for environmental, S for social, and G for governance. And it means different things for different companies. And so while in our estimation, there's over 130 different ESG related topics, every company needs to think about ESG in its own unique way and think about the levers of impact from both the environmental, social, and governance perspective. And so what that means is if you are a large industrials company, clearly carbon emissions, waste and pollution are really material for your business. If you're more related to services, human capital, diversity, equity, and inclusion, really have a material impact on your business. And some of the emerging issues around governance are starting to become important regardless of what sector that you're functioning in. And namely, we're thinking about executive compensation and tying executive compensation to ESG objectives. Another emerging topic around ESG is really around board diversity, and it's not just racial or ethnic diversity or gender diversity. We're talking about a diversity of thought, of leaders who can really take your company from where you are today to where you need to be in the future. Now, I'm American, as you can tell from my accent, and so we're seeing all these different global changes happening within ESG, and in particular in the United States over the last 6 months to a year, we've seen large shifts in policy and regulations that are pushing a lot of the global ESG investors forward. One is this regulatory disclosure change that's happened within the United States that's really focused on human capital management. And while it doesn't seem to be something that impactful or important, what it's really highlighting are regulatory agencies' recognition that ESG and human capital is a material risk to an organization's business. Another overarching sort of policy shift and regulatory shift is actually happening within the EU. And so the EU's ESG taxonomy, is set to come into effect in early 2022. It's really focused around the environmental pillar, in particular climate change, and how companies are investing in climate transition. And so it's going to be putting a lot of pressure on companies from the investor perspective to not only be able to disclose and articulate what their ESG policies and practices are, but how they're tackling this climate transition that we're all facing within the greater overall ESG universe. And so it's important to think about ESG from both its risks and opportunity factors. And there's quite a few emerging risks that are starting to become important. As you probably know, data privacy and data security has really become a sector agnostic risk, meaning it's a risk to every single business, whether you're from infrastructure, banking, technology. Data privacy and data security are really going to be some of the preeminent ESG risks in the next decade. And as we've seen in just the last few months, there's been a few breaches, ransomware attacks. And so every company is really going to have to strategize around how they're tackling the data privacy and data security issue. Climate risk is also emerging as a major ESG topic. And I think climate change is something that companies have been thinking about and talking about for decades. But climate risk is something different. It's not what is your emissions and how are you impacting climate change? It's really how is climate change impacting my business? And so that's anywhere from understanding where your supply chain is and seeing if there's any risks to your supply chain due to climate change. Or if you have a large real estate footprint, understanding where your buildings are and how exposed they are to climate risks. Ethical risks and human capital management are also emerging topics. And so ethics isn't just, do you have a code of conduct? It's how do you work within different taxes and systems depending on where you operate? Or how do you interact with government agencies? Do you participate in political lobbying? Human capital management is starting to become one of the preeminent sort of ESG topics and risks to companies' business, because if you're unable to retain top talent, you will not be profitable in the long term. And so understanding how companies are managing their human capital is becoming really summarily important within the ESG space. But the other side of a risk is really an opportunity, right? And so many companies are tackling ESG by developing products and services to help in climate transition and using their excellent human capital management practices to position themselves to recruit and retain top talent going into the future. Now, I work at Nasdaq, and so our perspective is always really capital markets focused. And so when we're thinking about these huge number of assets that are moving into the ESG space to the tune of $10 trillion over the last few years, you can understand that companies who are not tackling ESG from a strategic perspective are really leaving money on the table. And they're definitely excluding themselves from being at the table in conversation from a global perspective. Now, what's really interesting about ESG is that investors are taking different approaches to engaging with companies around ESG. And so one is actually looking at what we consider to be inclusion. So it's really looking at a company's management holistically, including their management of ESG factors, and using that as a way to estimate the organization's risk under their overall evaluation or valuation process. Another way, and a really important way, and we've seen some really interesting moves over the last couple of weeks, is actual engagement with management and with boards around ESG topics. And so they are not, investors are not only choosing to invest or divest because of ESG, but they're starting to engage with management in order to move these objectives along. And I think there's no greater example than what happened last week with Exxon, where investors really work together to say, we don't like your climate change strategy, and we're going to vote against your board members and install new board members in order for you guys to start to change your strategy that falls more in line with international and global expectations around climate change. And lastly, a lot of investors are using it as sort of a red flag, green flag. And so companies who are not really doing an excellent job at managing their ESG risks and opportunities are just not going to be invested in. If they're not meeting a sort of minimum threshold of management, they just won't invest in them. And so regardless of what type of investor you may be interacting with, they are using ESG as a means of evaluating or engaging with companies in the long term. One of the things that's really, I think, affected all of our lives over the last year has really been COVID-19, and it's impacted businesses in many different ways. From the social pillar, there's a couple really unique pieces that have been highlighted in the ESG space, namely human health and safety, work-life balance, and cybersecurity. Starting to think about human health and safety, I can think about all of our countries, no matter where we're from during lockdown, really started to see the emergence of these essential workers, of people who, regardless of what's happening from a lockdown perspective, have to go to work because it allows us all to live and to function. And so whether that's healthcare workers or grocery store workers, human health and safety started to become so important for companies to start to think about and tackle, both from a holistic perspective, but also so in sort of in an emergency preparedness perspective. COVID-19 also put a lot of workers back into their homes, and with these sort of dispersed workforce, many people had to start to take care of their elder family members and or their children at home during the workday. And so companies had to be limber and start to figure out how they can have a work-life balance where they can have a productive workforce, but also allow people who work for them to really take care of the things that are most important to them. And this emerging topic that is not going away, and I'll probably talk about a couple of times today, is really cybersecurity. And companies had to pivot really quickly to a more dispersed workforce. And so that meant making sure that they had to adapt their systems to be able to safely support their workers outside of the network of their office. And so cybersecurity is really starting to emerge as one of the key risks, especially as we may continue to have and see dispersed workforces in the future. Now, there's also some very obvious environmental impacts in a positive way of COVID-19. And so lockdowns really decreased travel, both from a corporate travel standpoint. It reduced industrial activities, and it really put a lot less pressure on areas whose economy, at least environmental pressure on areas whose economy is really focused around tourism. And so what we saw is a reduced fossil fuel consumption, which means that the global GHG emissions decreased. We saw reduced resource consumption, so pollution decreased, water quality at the same time increased. With some of those reduced industrial activities, once again, we saw this air quality dramatically improving. So you would see sort of pictures and videos of cities that normally have a lot of smog sort of open up and have more fresh air. And so we saw sort of the impact, the environmental impact in real time of some of these reduced activities. And also the reduced pressure in particular on some of these tourist destinations. We started to see some ecological restoration. And I think one of the examples that stood out to me was Venice. And once there were no tourists in Venice, that there was more fish that came out and sort of returned to their normal ecosystem. And so what it highlighted is not only the importance of environmental management, but that if we as a collective society can tackle climate change and climate transition, think about biodiversity as we build our businesses, that we actually can reverse course on climate change. And so the impetus and the focus really has become, well, we can do it. It's not something we can't do. We've done it. We've seen the positive impact. So how do we as companies within this global ecosystem really tackle our ESG risks and opportunities? So why does this all matter? ESG is not only something that's nice to have or doing good, some of those CSR initiatives that I think people used to think of ESG as. It's a way to build a more sustainable business for the future. It improves brand reputation, right? And so it really builds trust with customers, especially millennial and Gen Z customers who are looking for companies who are responsible both from a social and an environmental standpoint. It increases operational efficiencies, and really this is around money savings. And so while you may need to invest to transition energy in some way now in the short term, in the long term, you'll find some cost savings. You bolster your license to operate. The global regulatory system is really moving quite rapidly. And so companies, in order to sort of get ahead of what the expectations are going to be into the future, really need to understand and tackle their material ESG topics in order to start to be able to operate within the international ecosystem. Another area that's really important is just for our companies to be able to attract a skilled workforce. As this emergence around work-life balance, human health and safety, and just the importance of making sure that you're taking care of people that work for you, it's really either helping or hurting a company's ability to retain top talent. And especially as our economies move from production-based economies to more service-based economies, the focus really is that one of your main assets is your human capital. And the last thing is something that we were talking about before, is not just from the investor perspective, really gaining access to capital, but we're seeing more and more companies getting more favorable loan terms just by having excellent ESG practices and policies. And so what does this all mean? ESG and a company's ability to incorporate ESG into overall org strategy is just a reflection of good management. It's a mental move away from short-termism and quarterly earnings and into this idea of long-termism and taking care of our workforce, stewarding our environment so that we can function in the long term. And so I would really like to thank everyone for your time today. It's been a real pleasure to share my perspective, and hope that you took away from this conversation today this idea that ESG is not some sort of altruistic thing that it's a nice to have for companies. It's really an imperative that companies start to integrate ESG into their overall organizational strategy. So I thank you so much, and I hope you have a wonderful afternoon.